Every year, the Berkeley Goldman School of Public Policy releases a voluntary registry offsets database. This is done under their carbon trading project, and they recently just put out version 9 in November. We're going to go over that database now, which outlines the supply and demand fundamentals of the voluntary carbon markets. This database includes all projects registered under the 4 largest carbon registries and the projects that are regulated under the California and Quebec cap and trade programs. These represent the vast majority of projects in the voluntary carbon markets, so we can get a good idea of what the supply and demand landscape currently looks like. Keep in mind that this data is incomplete since it's from November, and a lot of offsets are generated in December, so the numbers for 2023 in particular will not be very accurate. With that said, here's the market share of the 4 largest carbon registries. We can see that Verra is by far the largest and has a near monopoly on particular methodologies. We'll get into that later on in the video. After Verra's approximately 65% market share, we have Gold Standard in second, American Carbon Registry in third, and Climate Action Reserve in fourth by size. The numbers do get skewed a bit by including projects registered under the California Air Resources Board, which is the ARB. But yeah, that's the state of the markets currently. In total, the VCMs have 8,559 projects across the 4 registries and the projects registered with the ARB. And now we'll break down the project numbers by methodology, aka project type, like reforestation or direct air capture. From the top, we have agriculture-based projects, which are primarily just manure methane digesters for now. Agriculture makes up 1.5% of the issued offsets currently in the market, with 900 different projects in this category. The next category is carbon capture, which will be an increasingly large focus of the market as time goes on, but currently carbon capture is very expensive, reaching prices of several $100s per ton in some cases. So the technology has a long ways to go before mainstream adoption. This makes up 1.1% of the market's production of carbon offsets, and that is primarily from carbon capture utilized in enhanced oil recovery. There are only 12 projects registered under carbon capture right now. Moving down, we have chemical processes, a larger section of the market, approximately 6% of the total offsets issued, the most popular types of projects being ozone-depleting substance recovery and HFC replacement or reclamation. So these processes are removing or stopping the release of harmful chemicals used in refrigerants. You'll notice that more projects in a category does not necessarily mean that they create more offsets. The amount of offsets created by a project depends on a variety of factors, particularly how much carbon these types of projects can actually sequester out of the atmosphere. So that's something to note. Next, we have a major category, forestry and land use. This is 40% of the total offsets issued, which equates to 759 million offsets. This is the largest of any category. There are also a significant number of projects in this space, 1,481 in total. The vast majority of those are REDD+, improved forest management, and reforestation projects. Verra oversees essentially all of them. They have a near monopoly on these types of methodologies, which can become a problem when the markets start realizing that Verra is not doing a great job of ensuring these projects are legitimate. This can hurt demand because of scandals, but it can also help us, as it could take a lot of REDD+ offsets out of the supply. So this goes both ways. Household and community makes up 7.7% of the offsets issued so far. There are 2,396 projects in this category, and this makes up the largest one by number of projects, but not by offsets issued. Most of the projects in this category are either cook stoves or biodigesters. Moving down, industrial and commercial is 5.9% of the market. There are 329 projects in total, with most being natural gas electricity generation switching, probably from switching from coal to natural gas. There's also mine methane capture or leak detection and repair in gas systems. Now we have another major section of the market, which is renewable energy. This makes up 32.4% of the market's current supply, with 2,322 projects listed at the moment. Wind, hydropower, and solar are all large portions of this market segment. It's worth noting that Verra no longer offers renewable energies as possible methodologies in the carbon markets. Now why is that? Because a key aspect of the carbon markets is something called additionality. This concept means that a carbon project has to exist specifically because of carbon financing for it to qualify as a proper carbon project. Now that renewable energy projects can be profitable on their own, they no longer need carbon financing to exist, which means that renewable energy will play less and less of a role in these markets as time goes on. But for now, this is still a large portion here at around 30%. Transportation is another possible market sector, reducing emissions from vehicles, but the segment's so small, at 0.1% of the total offsets, that it's hardly worth mentioning. Then the last market category is waste management, 5.8% of the VCMs by offsets issued, and 587 projects in total. This mainly accounts for projects that recycle methane created by landfills. Now, to break down where all these projects are located in the world, we can see the majority of them are located in North America and Asia, particularly the USA, China, and India. Each of them have over 1,000 projects on their own. Other notable mentions being Turkey, Mexico, Kenya, and Brazil, in the low hundreds each. Another graph Berkeley has provided shows us the breakdown of projects by region. Going over the primary sectors of interest, we can see that renewable energy projects are dominated by Asia and the Middle East. Forestry and land use is dominated by North and South America. Household and community projects, which are cook-stove projects primarily, are located in Africa and the Middle East. Chemical processes are dominated by North America, and agricultural projects are located in Asia and North America by majority. So just by knowing the type of methodology we're looking at, we can have a pretty good idea of where that project's located in the world. That can influence investments considering geopolitical risk can be higher in these projects depending on their location. Looking at offsets issued and retired over time, we can get a good grasp of the current supply and demand dynamics. Again, keep in mind this data was collected in November, so the numbers are not complete for 2023. The X-marked boxes show where the data ended year to date. We can see that both issuances of offsets and the retirements, or usage of them, were both trending downwards since 2021. But we can see that there's currently more supply than demand, supply being the red line and demand being blue. Granted, this does not take into account the quality of the offsets, which can vary wildly. This is why quality reforestation offsets can trade at around $20 or even $30 per ton, while others will trade at pennies. Not all offsets are equal. The thesis for carbon offsets is that retirements will drastically increase the closer we get to 2030 and beyond. For example, Shell might be revising these plans a bit, but their original goal was to use 120 million offsets per year. That's over a third of the total offsets in these markets, just for one oil giant alone. So you can see how demand could easily skyrocket past a potential supply. It seems like Shell will continue to be involved in these markets, considering they're still one of the top companies buying right now. They just offset 3 million tons of emissions in one day alone, and that was in December. We've also seen how the issuance numbers could be inflated due to overcrediting, so further regulation and oversight in the VCMs could bring supply down as well. Overall, this is a very bullish scenario for investors as time passes, assuming the carbon markets do take off down the line, and that's the big question. There is some hope for resurgence this year, as now we're in January and we can see the demand figures for December. Demand in 2023 actually broke records because of a sudden spike in retirements. We saw 36.4 million offsets used in the last month. So is that a sign of more to come in 2024? Hard to say. As I went over in my last video discussing the market outlook for carbon offsets this year, sentiment has not been the best. So if you'd like to hear more about my thoughts on that, you can watch that video, link in the description. Otherwise, thanks for watching.